Lunch, and that was so. Today, I am very happy to have from Galaxy Digital. So, real quick, Galaxy is traded. Shoot, that's right, out of Canada for now, right? You guys are working on getting over US at some point. I understand. Yes,
That's the
yes,
plan.
yeah, you are.
That's the plan.
I understand. It's the SEC can be challenging. Let's put it that way.
That's a nice way to describe Gary. Yeah.
Yeah. So anyway, why don't you give us maybe a quick, if you could, intro to you and Galaxy, just real quick.
Yeah. So quick intro of Galaxy. Galaxy is a digital assets company. Really, the best way to describe us is we are building platforms for native blockchain. We're building the platforms for a future of digital, decentralized, that's crypto native, Bitcoin, Ethereum, 1,000 other coins that exist today.
So, and how about your background, real quick?
My background, engineer by trade and study.
That's perfect.
Yeah,
You don't need to say anything else.
exactly. I've been at Galaxy for about 2.5 years now, and I co-head our mining business.
Right. Well, to follow on with that, so tell us about the mining operations at Galaxy, coins and whatever else you want to give us in terms of color.
Yeah, so the mining operation exists within one of our three verticals. We have our global markets division, we have our asset management division, and we have our business. In the DIS business, the mining operation runs roughly 1% of the Bitcoin network. It's a pretty fun project to run. Yeah.
Why West Texas?
West Texas for us, when we started.
Those mics are handhelds for now.
Change technology.
Yes, easy enough.
All right, let's try these. So why West Texas?
So that's really loud. West Texas for us, when we looked at the competitive landscape of mining and energy markets in the United States, we thought that ERCOT's Load Zone West was the most competitive energy market for us to operate in, for a couple of reasons. The first reason, there's a proliferation of solar and wind energy that exists in West Texas as this perfect overlap in the United States. And so, like what we've seen to date, I think March solar production in the Texas market, which is controlled by ERCOT, the Electric Reliability Council of Texas, has been 18.7 gigawatts of production at peak, which is an insane amount of solar. And given some of the federal subsidies around production tax credits and investment tax credits, solar and wind projects they bid very low in the marginal stack within the generation stack within the ERCOT grid. And so as we looked at it, we thought there's lots of solar, there's lots of wind, there's even more batteries, utility scale batteries coming online. We on a 10-year forward view thought that it was going to be the most competitive market in the entire world for energy.
And battery technology is improving, so that will only help with the situation, right?
It should, yeah. So batteries are a weird thing for Bitcoin miners and data centers alike. Batteries provide a significant amount of reliability service for grid operators, but at the same time, they kind of bid competitively against us for some of those things. But at the end of the day, like miners, traditional data center operators, the larger we get, we have to continue to be good stewards of the grids. Batteries providing reliability services is something that we like because it helps the overall reliability of the electric grid.
Now, your marginal cost in 2023 good compared to your competitors, yeah?
It was pretty good, yeah. So our marginal cost of production for a single Bitcoin in 2023 was under $8,000 per coin. Part of that is where we're geographically located in the ERCOT marketplace, and part of that is our active power management strategy.
Yeah, maybe you can give us a little color on the power management and how is that going to progress in the future?
Yeah, so power management is different from each grid, whether it's ERCOT or PJM or NYISO here in New York. Every grid has different underlying market mechanics and really like structures and almost rules of how they operate. Within the ERCOT marketplace, generators they get updated pricing every 5 minutes based on their node, but loads like data centers and Bitcoin mining operations actually pay a 15-minute weighted average price based on your megawatt hour consumption within that period. And so as we looked at the landscape, there's tons of solar, there's tons of wind, there's tons of batteries. In the wholesale deregulated market like ERCOT is, we can actually buy power forward and we can hedge our forward power costs, which has been, it was very accretive to the business in 2023.
Right. Now, when you look at your strategic priorities, a business group that you had, what do you kind of look at? I mean, mining, we're going into a Bitcoin halving here, what, I don't know, soon?
9-ish days, 10
9-ish
days.
so soonish. I guess the kind of question in my mind is what other coins are going to be out there that are going to be heavily mined? And what is your priorities for 2024, I guess?
So yeah, our 2024 priorities for the mining business, like we specifically target Bitcoin mining as our most competitive vertical. We don't actually mine any other coins within the mining business. Now across the entire crypto ecosystem, which is kind of that's the thing that Galaxy touches. We also have our strategic opportunities or StratOps business that's under the DISC vertical, and they provide proof of stake validator services. They actually run some of the other like Ethereum, Solana. They run other blockchains and then cater to institutional access to those blockchains. And so Harry and Zane, who run that team, they're close friends of mine. We work close on almost every single thing that we do. They're the ones that are focused on the other coins. We're primarily focused on just Bitcoin within the mining business.
Right. And to get back to the question, to priorities for this year.
Yeah. So priorities for 2024. I was telling John before we turned the mics on. Everybody caught me on a really good day. I was flying back from Phoenix yesterday at the Intel Vision conference, going through a lot of their AI offerings and what the tech stack looks like that Pat and his team are putting out. We are laser focused on Bitcoin mining. At our Helios facility, we've looked at other strategic opportunities for diversified loads. That includes hyperscaler deployments. That includes artificial intelligence training models. That includes orchestrated battery storage behind the meter at our existing meter. What a lot of people I think miss is where we sit in Load Zone West. Like we have a front of the meter site, so there's no co-located generation. There's not a wind asset or a solar asset there. We are taking from the grid at the highest transmission voltage possible, and we have an 800 megawatt interconnect. And so in 2024, one of the things that we're laser focused on is building out the longer lead infrastructure for the 800 megawatt substation that we have on site, so that we can take advantage of these other opportunities outside of the Bitcoin mining operation that has proven to be almost like a rinse and repeat pattern for making money at this point.
And there's proprietary mining and there's side. Why do you think about which in which way?
So Helios is right now, I just got up from my computer a few minutes ago. We're flowing roughly 185 megawatts at our project substation. I think it's 65% proprietary, about 35% hosted. Proprietary means that Galaxy owns the machines. It's our infrastructure. It's our machines. We're running it to our own Bitcoin wallets. The hosting side of the business, which is more akin to a co-located or managed services offering, like a traditional data center. We have two clients, both institutional clients. We don't cater to a retail base anywhere across the firm. And those folks, they buy machines, they send us machines, and then we run them within our own infrastructure under hosting agreements or co-location agreements. Those are typically pretty. How could I say this? They're very value aligned with our hosting clients and us in their structure, and that's how we like to do business.
Great. Now, what do you think having that we just talked about is going to happen in 9 days or 10 days or whatever? What is that going to cause to happen? What's going to happen?
Yeah, so the halving is a really interesting event that happens every 4 years within the Bitcoin ecosystem. The block subsidy, as we see it now, it's 6.25 Bitcoin every 10 minutes, roughly every 10 minutes when a block is found. In 9 or 10 days, the amount of Bitcoin in every block that's found as part of the subsidy gets cut clean in half to 3.125 Bitcoin. And so from a purely economic standpoint, your like normalized revenue gets cut in half. There are also transaction fees that are roughly 3% of the block reward on a trailing like 2016 or 2-week basis. But right now, the best mental model around what the halving does to the economic of miners is it takes your bid to buy curve, like what is your normalized dollar per megawatt hour in energy, and it shifts it down 50%. And so we at the Helios facility, our bid to buy curve is somewhere in the, let's say $140 to $180 per megawatt hour right now. That'll shift down to $70 to $90 a megawatt hour as we look at interacting with the ERCOT grid.
Right. And do you think, and this is maybe speculation on your part, is it going to put the squeeze on some of the marginal miners?
It should, yeah. So if you are a miner that's operating at the margins today, it's really going to put the squeeze on you. If you're a miner that's operating at the margins post-halving and your operations aren't really tight or your power management strategy is not impeccable, I think there are going to be miners, or if you have a significant amount of debt to service, there are going to be miners that are either not operating in a deregulated wholesale energy market like the ERCOT market is, and or are mining unprofitably and hoping that price recovers or hash price recovers or network difficulty goes down as other miners drop off the network that are running unprofitably to begin with.
So does this make for some M&A possibilities?
I think it does. The challenging part about M&A is we really believe we have the best piece of dirt in the entire country. I think Novo said that last week. If there's an M&A opportunity that is ASICs or acquihire acquisition of a team or specific technology, that's really interesting to us. But I find it would be pretty difficult for an M&A opportunity that has better economics than we do, considering what we posted in 2023.
Right. So acquihire might be more appropriate to the type of style you'd be interested in.
Yeah, look, I think it's always difficult to find really strong operators within a nascent industry, and to find people with real world experience operating digital infrastructure at massive scale. There are probably some companies that, to your earlier point, are going to be squeezed, and we are always looking for exceptional talent to join the team.
Now, the hash rate is part of the algorithm that goes into how much money you can make mining Bitcoins. So you got the hash rate, you got your energy cost, and obviously you got the price of Bitcoin itself, and then there's the halving. So let's talk about the hash rate for a minute.
Yep.
Where do you think that that's going, and how are you guys feel like you're doing there?
So with our hash rate, our under management hash rate, I think we said it was 5.4 exahash per second across our mining portfolio. That includes prop and hosted. The network hash rate, we've seen just almost exponential growth over the last 12 months. Right now, it sits somewhere around 630 exahash, which is just an insane amount. And exahash, for reference, the Helios facility runs 5.4 or just under 1% of the network at 185 megawatts of actual power consumption in real time. When you look at the total Bitcoin network at 635, that means there's over 100 of those Helios networks out there. There's over 18 gigawatts of power that's backing the Bitcoin network at this point. What happens with hash rate post halving? It's anyone's guess. You know, I would love to say that I can pull Karim Helmi's nonce analysis, which is an analysis of every block that's found on the Bitcoin network, because every mining machine that finds a block has a specific fingerprint, and determine with some granularity what the makeup of mining machines on the network is. But internally, we're benchmarking somewhere between like 10 and 17% of network hash rate that just drops off after the halving because it's no longer profitable to run those machines.
So if you look at, you mentioned transaction fees earlier. I had one thing I ask, is it in terms of percentage of mining revenue? I mean, halving, I guess that's going to go up. Transactions are going to be, it's a per coin transaction, right? Fee?
Correct. Yeah. So the best way to think about transaction fees today is that they are, again, for the last 2 weeks, they've been roughly 3% of the total block reward. And the block reward is made up of the block subsidy and the transaction fees included within that block. Now, post halving, that 3% should go up to 6 or 7% if fees stay the same. But what we saw in Q4 was just this insane, almost like surge of transaction fees with some of the layer 2 projects that have been happening on Bitcoin, specifically the BRC20 mints and the Ordinals projects that we've seen. These are more akin to like the NFTs that everybody's familiar with on Ethereum. In Q4, they're minting these things like crazy and trading them in secondary marketplaces. And as part of the minting process, you have to pay transaction fees in order to get into the next block. And so we saw massive transaction fees in Q4. In Q1, we've seen very low transaction fees. And it's almost like a real-time auction marketplace that as a miner, you have to monitor and you have to be able to forecast transaction fee revenue relative to your energy price.
So do you bake that somehow into your internal projections and your budget? I mean, how do you do that?
We don't. Transaction fees, because you can't really rely on them, we take a very conservative approach to our forecasting. And we do like 2 or 3% of the total block reward.
So anything above that's just icing on the cake.
It's gravy. Yep.
You know, I'm going to ask him one last question, but we will open up to the audience for questions here in a couple minutes. So I just want to let you know that was going to happen, so you can think about your really hard questions for him. Because I'm not going to ask him really hard questions, but you guys can do that. So I guess one of the final questions, or the final question for me maybe, is what do you want people to take away from what Galaxy is doing, A, in mining, and B, in general?
Yeah. So A in mining, Galaxy's mining business, and I'm a little bit biased on this. We are world-class digital infrastructure operators. Whether that's miners and building mining infrastructure or traditional data center infrastructure, we're doing both at this point. Because we sit within a diversified business, Galaxy Topco, across the 3 different verticals, we're really synergistic, and we're a diversified crypto play. Whereas most public miners are Bitcoin price, network hash rate, miners. That's it. And so I think the big takeaway, A, for the mining business is it exists within a diversified portfolio. And then B, for Galaxy, is Galaxy's a diversified crypto play where there aren't a lot of those in the market today.
If we could go ahead and open it up to questions. Do you need the microphone back?
All right. Any questions from the audience here?
How you doing? So you mentioned ordinals, and I think runes are also coming online now, and a bunch of other stuff is probably gonna. So is there any chance that the fees will increase so much that mining will become unprofitable over time, or how do you see it?
So that fees will
If that didn't make sense, I'm sorry, but I was just
that fees will increase.
yeah.
If fees increase so much, I am wildly profitable.
Oh, okay. Sorry, that was my misunderstanding. Okay.
Yeah. So how every 10 minutes when a Bitcoin block is found, the issuance schedule of the Bitcoin network is predetermined at the time Satoshi wrote the code and the existing consensus mechanism. Transaction fees that go into every block are just a function of everybody in this room wants to transact. You want to be included in the block, but there's a huge auction or what's called a memory pool within the network. Every node has a mempool that includes blocks. Bitcoin mining pools, which is where all the hash rate is aggregated for these like almost streamlined or non-volatile payouts. They construct a block template that if they want miners to continue to point hash rate at their pool, the block template includes the transactions that are most profitable to be mined that can fit within the actual size or digital size of the block, like a couple megabytes, like 4 megabytes per block. And so as ordinals and even runes come online, and those continue to get minted by, I think runes, is that Casey's team?
I think so. Yeah.
Casey Rodimer's team? Yeah. As the runes come online, if that kicks off like Q4 did with ordinals and the BRC20 mints, miners will become wildly profitable as they take in those transaction fees.
Thank you.
So does that stimulate?
Yeah, so John's question is, does it stimulate miners that are operating at the margins of whatever power market they're in or whatever power energy forward curve they're looking at? The answer is yes, but these things are really sprints and stops. So when you look at block production, it's roughly every 10 minutes, but there's a plethora of mining pools now. And so if you're a marginal miner and you're counting on these volatile transaction fees, you better hope that you're at the pool that actually mines the block with the transaction fees. Otherwise, you don't get rewarded for that.
I think this question is related to all this and the having, balancing having events with the long-term trajectory of price and then transaction fees. It seems as though having undermines the power and capability of the network, and in absent anything else, Bitcoin price increases it. So lower supply, more stable, more demand, price goes up. And then transaction fees, like longer term, how should an investor think about, it's kind of been said, do we need these transaction fees to take over and really start to drive the network power consumption, everything, so that we're not so reliant on this, the mining in itself, given that having continues to literally, no pun intended, undermine the economics fundamentally.
Yeah. So let me repeat your question back to you and make sure that I got it correct. So every 4 years when the halving happens, the halving effectively cuts the supply issuance schedule in half. 50% is the block subsidy, which undermines a mining business's revenue on a go-forward basis. As we look at transaction fees, I think block subsidy going from 6.25 to 3.125 Bitcoin every 10 minutes is a big deal. I think ultimately it drives mining entities and mining companies or any company that's involved in mining to seek out the lowest cost electricity, which is our core thesis in the acquisition of Helios from Argo at the end of 2022. I think investors shouldn't rely on transaction fees. We don't rely on transaction fees in our forward modeling. We rely on the fact that I know what the 12-month forward curve looks like in ERCOT Load Zone West. I know what I can bid into the ancillary services market to provide grid stability and get paid for that. And I know with some certainty what the hash price and hash price deliverable forwards market looks like. That's currently emerging across a couple different verticals. And so I think investors shouldn't bank on transaction fees. I think you should bank on the lowest cost producers of Bitcoin being at the furthest lowest left side of the cost curve, being profitable and being able to weather halving events on a go-forward basis.
Answer this, that's okay.
Yeah, I think we did. Yeah. How big is the mining business? So hash rate under management, roughly 1% of the Bitcoin network. Revenue, last year we did close to 60, how much? 58 million-ish. Profitability, I I hate to say, I think prop mining was like almost 70%. It was, it was really high. A lot of that was our active power management strategy. In Q3 last year, we saw the hottest summer on record in Texas. Given some of our power trading around the Helios facility's load, we were able to have a negative marginal cost of production across Q3 last year. We because of the power trading that we did, we effectively got paid to mine Bitcoin. And I think, going forward as we continue to scale out Helios, some of our 2024 plans, it'll get more profitable. And if transaction fees because of runes and ordinals continue to go up, it'll be wildly profitable as a business. Yes. Yeah, no. So John's question was, as distributed finance and kind of the digital asset ecosystems continue to grow, operations like ours are going to continue to be a need in the marketplace. And the answer to that is yes. I alluded to it earlier. I just came back from Intel's Vision Conference, and we're looking at some very strategic things to do with the Helios facility and with the Helios campus. But as we see this proliferation of these different blockchain ecosystems within the overall crypto ecosystem, and as we see like this growing demand for data centers, whether it's HPC or an AI data center that's specifically training some LLM like large language model for some chatbot somewhere, like the load, it might not be Bitcoin, it might be AI, it might be HPC, but there's just massive growing demand for just huge amounts of power capacity.
In terms of your current installations, you heavily on ASICs today, but you're talking to Intel. Going to Intel for ASICs, or as you going to Intel for GPUs?
Yeah,
or CPUs?
so Intel's an interesting one. They did an ASIC offering a couple years ago, and picked four companies in the space. They, at the end of 2023, they discontinued the ASIC production because the market conditions were pretty terrible. And like from an engineering perspective, the ability to take an ASIC, to take a fab and put it in an OEM, to put it in a what most people think about as a miner, which is like an aluminum shoebox with a power supply slapped to the side of it. It's very complicated. Like to build all the logic gates and to actually OEM hash boards is not something that's easily done. I've got a friend at Grid Infrastructure, Mike Hamilton, he's their CTO. He's really smart. He did some of this, but we're not looking to Intel for ASICs. We are looking to them for other strategic opportunities that may present themselves.
Well, Austin, thank you so much for being here, everyone. That ends this session, and we're going to move on to the next one.
Awesome. Thanks, guys.
Thank you.
Hi, everyone. Welcome back to the Water Tower AI and Technology Research Conference. Our next presentation will be from John Belizaire. Did I say that right? Yes, CEO and Director of Soluna Holdings, which trades on NASDAQ under the symbol SLNH. As a reminder to everyone in person, immediately following the presentation, management, John included, will be in the front conference room for breakout session if you'd like to meet with them there. If you would like to schedule a one-on-one meeting with them, please see anybody at the Water Tower desk. Welcome, John.
Good to be back to a WTR conference. The last time I did this, I forgot to bring my glasses, so I couldn't see the slides, advancing. Now I can actually see it. So I'm going to do something a little different today. We're going to talk about a couple of different concepts. One of them I think is more important than the AI piece. For those of you who don't know me, I am a computer scientist by training. I've been an entrepreneur for 5 years, and I was classically trained in distributed computing. And now I run Soluna, which is a green data center focused infrastructure company. And instead of talking about the virtues of AI and all of the advancements around large language models, I actually want to talk about something that's much bigger and more important than AI, and talk about AI's role in advancing that. And the concept is convergence. And convergence is basically the concept whereby you take two technologies and you integrate them together to transform the way you solve problems and actually advance us, society, big problems on challenges that we encounter. And to give you a sense of what that is, I want to take you back to my first experience with convergence. What you're going to notice as we go through this presentation is we've all experienced convergence, and we're experiencing it today. And it plays a very big role in how we see the world change from a technology perspective. So 25 years ago, I started my career at Intel. Intel at the time was probably the 800-pound gorilla in the PC industry. They were shaping the future of computing by developing these very advanced semiconductor chips and so forth. I would say that Intel represents the sort of foundational elements of my professional career, and a lot of what I've learned as a leader started there. Andy Grove was the CEO at the time, and in doing what he was doing, which was transforming the company from being in the memory business to the microprocessor business and launching the PC industry, he had this interesting and prescient insight. And that insight was that the PC can be more than just a productivity tool. In fact, at a very famous presentation at Comdex, which happened in the sort of 90s, he gave this sweeping presentation. And in the presentation, he said the following, and I quote, the PC started as two simple tools, two simple applications. A word processor, which we're all familiar with, buried in Excel a lot. A spreadsheet application, and a word processor. And he said, but now when you look at the communication applications on the PC and you combine them with telecommunications capabilities, you will now be able to reach out through time and space and connect people through the PC. The PC would become a new advanced technology. Now, it's interesting to be saying this 25 years later. You're all looking at me like, yeah, of course, you use the PC every day. And, many of us who are Zoom users or Team users are probably tired of reaching out through time and space and connecting with people over the computer. But it turns out that that insight is the foundation for almost every single technology revolution or transformation we've seen for the better part of the last 2 decades. And the reason is because that insight essentially set the stage for thinking about technologies and the relationships with each other. So at the time, there were two big problems. You had the PC, which was growing at a really fast rate, and it needed to find a new way, a new role for it to continue to expand. the PC needed to be more than just a productivity tool. Telecommunications, the telecom business, was going through a major transformation itself. It had been deregulated. They were looking for new growth ways. How do you drive more demand for the infrastructure we built? So they needed to be more than just about audio. Telecom can be more than about audio. We can move more things over those lines. And it turns out by combining those things, because Andy Grove had to build a network of technologies to make that vision that he set out come true, he essentially set the stage for the first major convergence, the convergence of PCs and the telecommunications industry. That has a name: collaboration and communication. So every single collaboration platform and communication platform, in fact, we're all sitting with a PC essentially in our pockets right now that have become the platform for how we communicate with each other and just about every other place in the world. So this concept of convergence is very powerful. In fact, I bet we can all name a series of convergence that's happened over the last 2 decades. It's all around us. In fact, every major transformation has been driven by convergence. Um, Folks in the room with me here, can you name one? Two technologies merging together to create something new and unique. I've hinted to one in your pocket. So the iPhone, it's the convergence between essentially media or technology and the internet, or telecom and the internet, or mobile technology and the internet. That's actually a multi-convergence technology. Any other examples? Well, iPhone was one. Social media is another one. So that's the convergence of user-generated content and a social graph. So look at a social network, find those with content, you create a social network. And I'll give you one more. And everybody heard of Ozempic? That's made possible by biotechnology. That's the convergence between biology and computing. So AI is also a convergence. It's actually a convergence of really large big data and the microprocessor space, specialized chips. Once you understand that concept, you start to see it everywhere. Now, I want to talk to you about a convergence that's taking place that no one really knows about, but it could be the biggest convergence we've ever seen. To understand it, I want to take you through to a fairly big industry that has a little secret, and that is the renewable energy space. So in the renewable energy space, it is now the largest growing form of power that we use in society. In the past, coal was a big major player. Nuclear had a run to sort of overtake that, but renewable energy. So we're talking about wind, solar, hydroelectric technology is now the biggest supplier of power and is increasing at an accelerated rate. That's because it's benefiting from something called Wright's Law, which is a basic concept is that the more you do something, the cheaper it gets, the easier, the better you get good you get at it, and so you can do more of it faster. So chips are an example that are benefiting from that. Moore's Law example, we've seen that over the last 20 years. Renewable energy is benefiting from that, and so it's everywhere. The problem is that about 30 to 40% of the power that these large power plants produce actually never makes it to the grid. Most of it is wasted. Raise your hand if you knew that. Don't. Okay, you guys work with me. That doesn't count. But we've seen facilities that require hundreds of millions of dollars to be built. They supply power to some of the biggest energy markets in the world, but half of their energy actually never gets monetized. And that is a major detriment to the continued growth of renewables. And it actually is one of the biggest challenges with overcoming climate, because power isn't getting to get developed in a way that can supply throughout that environment. Now, people always ask me, I have 2 kids, but my wife and I still try to hang out. And when we go to these little cocktail parties, people say, "But I get what you're doing. That's cool. But can't you just store it?" Yes, there are solutions to the wasted energy problem. One of them is a battery. You can put batteries out there, but batteries are challenged. They're just not scalable enough to absorb all of this energy. Well, why can't you just move it? So if the wind is blowing really heavily at night in Oklahoma, why don't you just send the power down to Atlanta, where people might be partying at night at one of my favorite clubs or something like that? It turns out that both of those have challenges, and it takes a long time to build power lines, and it just needs like a fast lane for building up lines. So that's the renewable energy space. Let's look at AI. AI is also going through a major growth. Um, if you look at the revenue potential for AI, it started out in the single digits billions and is purported to be focused and growing to a level where it's going to be over $150 billion in the next couple of decades. By 31, it'll be $126 billion, and that's really driven by the fact that for the first time, computing has reached to a point where it can process data at superhuman scale. We can't process the amount of data that we produce. Just sitting here in the room, I know I've seen some of you with the smart watches and everything. It's collecting information constantly. And to process that and get insights, you need a next level technology, and that's what AI represents. And in fact, that data is getting so big that the computing power needed for it is growing and advancing at a faster rate than Moore's Law. Moore's Law used to say things double every 2 years. Now things are doubling in the AI space every 6 months. And so you're seeing a huge advancement in terms of the need for computing. And by causation, the need for computing is also driving a huge need for power. ChatGPT 3, now I need my glasses, used a gigawatt of energy, gigawatt hour of energy to train it. 1 MWh is about 1,000 homes, by the way. So think 1,000 homes is what you're talking about in terms of power consumption. It drank about 8 million glasses of water to do that process. So it's very intensive around use of water for cooling. And GPT-4 is considered to have used 10 times that power capacity. GPT-5 and other technologies are underway that are just going to really dwarf that. So the thing about it is this technology and other computing technologies similar to it are going to represent a huge footprint. So if you look at the pie of energy use on a global basis, about 20% of that, which is the computing portion, will dwarf all power consumption combined. So data centers and computing is becoming a huge part of how society is evolving because we're going to leverage this technology in a So I just talked about 2 concepts. Energy is growing at a really fast rate, but it has this wasted energy problem. AI is also growing at an incredible rate, but it also has a problem. In order for it to reach its potential, it needs more sustainable sources for energy. So what we do is we build data centers. We build data centers that are co-located with renewable energy power plants, specifically because we believe that computing and renewables is a convergence opportunity. Essentially, you have this problem in the renewable energy space where energy and power is wasted. They have this big problem. And then for AI to reach its potential, it's going to need sources for energy. And some of the biggest data center companies in the world right now are on this massive hunt for power. The challenge is that for the next 3 years, they really don't see where that power is coming from, so that you're going to see lots of consolidation among these companies. There's sort of talks about vertical integration into power, et cetera. But renewable energy is a very powerful resource. AI is a very powerful computing capability. And when you converge those two things, you create a new thing, a new potential opportunity, and we call that renewable computing. So I want to show you how that works for a second here. This is a data center we call Project Dorothy. Isn't she beautiful? She's our flagship site. She's in Texas. She's co-located with a 150 megawatt wind farm that is experiencing this wasted energy problem I talked about. So if you look at the wind farm over the last 4 years, the blue bars is the production of the wind farm. So 69% is getting to the grid, 31% is not in 2020. In fact, the farm started in 2016 and they were fine. They were producing almost 99% of their power getting to the grid. And over the course of 4 years, more and more of their power became category. And if you look at the last 4 years, you're sort of in that range that I talked about, the 30 to 40%. Last year, we saw it get close to the 50%. Our facility being there, our facility is specifically designed to convert efficiently that energy into massive amounts of computing. And this particular facility does Bitcoin mining. We'll talk about the facilities that we're going to build down the road. We consume half of that energy. So we have a 50 megawatt facility there, next to that 150 megawatt, about a third of the size of the wind farm, but we consume half of its wasted energy. So when we double that facility, which we plan to do this year, we will eat more of that wasted energy as part of it. Let me show you how that works and how that creates this sort of virtuous cycle of benefit for a lot of different players. This facility that we have there, Dorothy, actually benefits 3 constituencies, if you will. On one hand, we're supporting the production of Bitcoin in a greener way. A 50 megawatt facility generates about $5 million worth of Bitcoin per month. And the wind farm is generating 5 incremental $1 million a month because our facility is there. It used to lose 2 times that, but now that we're there, they can sell more energy. They get all the tax credits that they would have lost because wasted. And they also get to benefit from the renewable credits that they generate by selling the power to us. The grid benefits because that data center is actually a very flexible system. It can ramp up and ramp down. So the grid can take back that power and use it to power homes and so forth during these peak periods. And so the relationship between those 3 is basically all, economic benefit and expansion. What we plan to do is at the same site and in other sites like it is build AI facilities that are specifically tuned and designed for doing large language model training, tuning, and inference. It turns out that if you build the facility specialized or purpose built to do one thing, you can place it in these remote locations and integrate it directly into power. So right now, companies like Digital Realty, Equinix, et cetera, are sort of running around looking for these huge stores of power. Well, we've found gigawatts of it just sitting there because it's otherwise wasted. So by injecting our facilities there, we can unlock massive amounts of resources for growing the AI business. That little triangle on the left is not a pizza pie. It's actually a very specific design for our new AI facility. It will have a specialized design that's different than our Bitcoin facilities. It will allow us to use a new way to cool the chips in the building. We actually have a special magic water that circles around in the building. And then we cool that water on that magic loop. It's called direct liquid cooling, and actually passes over the chips themselves to cool them. And we designed the facility to be scalable. So you can add more of those slices, if you will, to make a bigger and bigger facility as you grow. And it's plug and play in terms that we can plug in different computing resources and designs into that facility. That allows us to build these very scaled facilities in these renewable energy rich environments. We have 2 gigawatts of power in our pipeline. So we've been working with companies that own these power plants large infrastructure companies, they come to us with 5 to 10 different projects that have challenges. We analyze them, and then we design these data centers to fit within those environments. So now, what does this do from a economic perspective, and how does it build on each other? So, and imagine now we're doing convergence. We build these data centers at these renewable sites. We now can drive more sustainability in the AI space. The AI space then supports more renewable energy development. Energy development drives more green energy to the grid, and that all creates a cycle which drives more AI applications and revenue and growth. That then leads to applications of AI for climate change, forecasting, weather forecasting, drug discovery, and a host of all sorts of applications. I mean, if you look at AI, it's going to be applied to just about anything out there. And so it's the next big technology wave, but it needs convergence to make it possible. Now, I just talked about one power plant in Texas that we're working on. Every single year, most of the new energy that comes online is green, and that's accelerating over time. So if you think about it, we're not just talking about brand new plants or plants that exist. We're talking about the new ones, the existing ones, the wind, the solar, the hydro. There's multiple of them around the country. They're being built in all different parts of the world. It's a global phenomenon from a renewable energy perspective that's just highly scalable. And if you actually had to put a number to the amount of energy we're talking about, somewhere around 225 terawatt hours of this energy is wasted every single year. So is there enough energy to support this new technology? Yes, there is, if you think differently about those different things. And 225 terawatt hours, by the way, is about things like 80 million barrels of oil, to put it in perspective. All right, so how does this economically look? So if we start building these data centers and we look at each of our facilities as this independent project, each project basically stands on its own, generates a certain amount of profit. If we build out 1 megawatt of an AI facility, it returns its capital in about 27 months, gets to a 15 to or so $1 million EBITDA run rate in a very short period of time. And within 6 months, it's returning that capital. So these are very profitable, high return projects that you can build in these environments. And our company is about building them out and deploying them within our pipeline, and that scales up to drive revenue and growth and profit for our business. So convergence, there you go. You got a lesson today in convergence and the relationship between AI. It's a massive opportunity when you think about it, combining those two things. And it really is going to drive the future of computing and AI. And in many ways, profitability for folks who invest in a company that's doing that. So thanks for your time today. I'm happy to take questions. Looks like I got 3 minutes.
All right, John, thank you very much. Any questions from the audience?
Yeah, a quick question on balancing, power usage and compute, and then the connectivity issue, right? So we know the power is out there, but a lot of times Equinix and Digital Realty, they've been building close to the grid, but as you move, some of these facilities may not be so close to a big internet hub. How Bitcoin mining can kind of be standalone, from best I understand. Maybe. I'm not all that savvy about the intricacies of the technology, but could you just talk about the connectivity issue?
Great question. So there tend to be a lot of misconceptions about computing and what their requirements are. If you look at how many people have a subscription to Netflix? Favorite show, mine is The Crown right now. But anyway, if you're watching The Crown, like my wife and I are doing, you don't want that to go down. And so you need that internet bandwidth to be pretty rich and close to the content and flowing to you at a really high speed and rate. If you're mining Bitcoin, it's a batchable process. You can do the work at that location and then send the results out to the Bitcoin network, so you can help to mine that next block. If you're training a very large language model, the data corpus has to land at that location, but most of the work is computing work. So it's doing that work at that location. And then once that computing work is done, the model is the most important part of it. And that model then gets implemented as a inference platform. So when you're typing into Chat GPT, there's no training that's taking place. It's actually using the model to answer your questions. And in that case, that's also mostly computing as well. So the strategy that we're taking and what we're going to prove as a company is that you can do large scale next generation computing in these rural parts of the country integrated to power. And the connectivity pipes that we're going to build out will become an infrastructure growth opportunity for the country. The government, I'm sure, will be very happy to do that, because lots of people in these areas don't even have access to the internet because people thought we can't do that stuff out there. And it turns out you can if you think about the computing differently, you design the data center differently, and you only put those types of applications that can sort of be resilient to those environments. So the answer to the connectivity question is connectivity can get there if there's an economic reason for it to be there.
Do we have any other questions from the audience? All right, John, I think that brings us to the end of your presentation. Thank you very much.
everyone. Our next presentation will be from Louis Chen, EVP and Chief Strategy Officer of Perfect Corp, which trades on the NYSE under the symbol PERF. As a reminder to everybody in attendance, immediately following the presentation, management will be in the front conference room for a breakout session if you'd like to meet them there. If you would like to schedule a one-on-one meeting with them, please just see somebody at the water tower desk. And with that, welcome, Louis.
Good afternoon, everyone. Thank you for staying with me here. So today I would like to share with you more about our company, Perfect Corp. So we are a tech company very much focused in beauty tech and fashion tech as a SaaS company. So the company was founded in 2015, and we took it public here in NYC in October 2022. So it has been almost a year and a half. So our mission is to help solve the consumer pain point through AI and AR technology, really to help them through the shopping experience for beauty product, and now more recently on luxury jewelries and fashion that I'll talk about during that moment. So today the company is a little bit over 300 professionals. We have the headquarters and the development center in Taipei. I just flew in 2 days ago. But the US is actually our largest market. So 50% of our revenue are coming here from the US. And that's one of the key reasons we choose to list this company here in the US. Actually, the management team, this is our second public company. We took the first one in 2001. A company called Cyberlink is still listed in Taiwan. But this is our first company to be listed here in the US. We have a development team of around 150 developers in Taipei, very much expert in AI and AR developments. And then business development team, marketing team here in the US, about 30 professionals, and then France and Tokyo. So after 9 years with this company, so we now really have more than 20 different products, different SaaS modules. So it's becoming a little bit difficult to remember each of them. So I try to put them in 4 different pillars, so help you understand better in different lines of business that we operate. The first one is what we call the Skin AI. So it's technology such as skin diagnosis using your iPad or your iPhones to help dermatologists, to help med spa or skincare product brands to help consumer identify their skin concerns. So the technology works today for up to 14 different skin concerns, and it just takes about 3 to 4 seconds to scan your face and tell you, how you compare to the different cohort. For example, the state of your skin is dry, is oily, is hybrid, is wrinkles, spot, acne, and really the brand are using this information to give user a more personalized recommendation when it comes to shop for skincare products. The second pillar there is the Beauty AI. So this is one of our core product for virtual try-on. This is how we started in 2015. And hopefully I can run some of the video later on to show you some of the demo. So the experience is very simple. Today, when you go to e-commerce websites, for example, esteelauder.com, different brands on the Coty, Chanel, for example, and you try to shop for lipstick, how does consumer know if the shade will actually match her skin tone or her style? So we use AI and AR technology to track your facial movement and then overlay the different shades on your face. And that's not only for lipstick, for the whole category in beauty, including eyeshadows, makeup, foundations, and everything. In the most recent 2 years, we expanded our reach to what we call the Fashion AI. So that includes jewelries and watches and accessories. And then more recently, in the last 12 months, our team has been really busy on generative AI, as we have also a family of mobile apps operate on selfie and photo imaging creation and editing. So to dive deep on these, the company has 2 different monetization models. Last year we did about $54 million in revenue, and it was about 50% in B2B and 50% from B2C. On the B2B side is very much a SaaS model. So we have, as I said, more than 20 different modules that we offer that as a subscription, mostly on annual basis to beauty brands. So the Estée Lauder of the world, Shiseido, and Coty. So they subscribe these services to be part of their consumer journey, digital journeys, whether it's come to e-commerce or just engagement with a consumer online. On the B2C side, we operate mainly 5 different mobile apps under the YouCam franchise. So they are freemium models. Consumer can download the app for free from Apple Store or Google Play. And then they can enjoy 7-day free trials. At the end of the free trial periods, The user have a choice to opt in for a premium subscription around $39 per year or $5 per month. And if not, they can still use the app for free with limited functionalities. So both sides of the business is very complementary because it's just one P&L, right? We develop the engine, we develop the technology once, and we're able to monetize that with two different ways. And also, they also give us a unique advantage here. The B2C pace is much faster, so we can introduce new technology to consumers every 3 weeks. The apps get updated every 3 weeks. While the B2B business, because the nature is enterprise, is contractual, it always takes much more longer time. So it's great that when we innovate a new technology in AI, we're able to pilot that on our B2C platforms, have about 13 to 14 million a monthly active user on our mobile apps. And we're able to gain a lot of data and optimize the product on the B2C. Once the product is very much robust and mature, then we introduce that into the B2B space. So starting with the B2B at the nutshell, today we serve about 645 brands, mostly global beauty brands. You see some of the key logos here. And very interesting is this platform that we have built every season, whether it's a spring collection, the summer collection, when there's a new product coming out from the beauty brands, they use our platform and the toolkit that we developed to create a digital version of it. And so this is our online database that now is over 700,000 SKUs, makeup products that people can try virtually, making this the largest beauty product AR database in the world. And it continues to grow. Here I put a chart to let you see the trends that we have seen. The first chart is about number of brands that we are serving on our platform. The last reported quarter was 645. So on average, I think it's growing about 20, 30 new brands every quarter, depending on the season. And some investor will ask me, how big is this market? To just give you a perspective, globally, I think from our count and our studies, there's around 2,500 beauty brands in the world. Right? Some are larger multinational, some are independent brands or regional brands. So I think there's still a significant amount of untapped market that we're going after. On the right-hand side, you see the chart about the SKUs that we serve. This is also very important. Every quarter when the brand have either a new brand on board or they have a new assortment of product in their catalog, they'll contribute that into our platform. And there's also the part of the monetization. If they put more SKUs on the platform, their licensing fee also goes up. So as last reported quarter, a little bit over 700,000 and continues to grow. On the B2C side, we operate, as I said, 5 main mobile apps under the YouCam franchise. Anything from the makeover app to selfie camera, photo editing, generated AI, AI creation, image creation apps. So one of the key metrics that we track on this app is how many of them we can actually turn them into paying subscribers. Right? So I think that is a very good model. It's a recurring revenue base, very predictable. So this is our last reported quarter, around near 900,000 active paying subscriber. As I said, paying around $39 per year. Around 90% of those paying subscribers, they opt in for the annual plan. So I think that gives us the confidence that this is really a high frequency use type of product because people who like to take selfie, they end up taking it many, many times in a day, for their foodies or, even take for their pets. So I think it's good progress there. We see a very strong momentum in the mobile beauty app business as more and more consumers, not only in the US, but globally, are willing and able to accept for paying a subscription for our digital app products. A little bit of history about what is a pain point that we are solving for the beauty industry. Prior to technology, if you think about how women shop beauty products, heavily rely on samples, right? So when you go to Sephora, they always try to let you to try the shades. My wife ended up buying a lot of those, but then she's never really trying on her lip. It's just, sanitary concern. You don't know who have touched that. So they're always doing that, just like the image here, some question on the palm of her hand, which is not exactly the shade of your lip and it's not really on your face. So you have to kind of simulate and think about how that works. Not to mention that not all the color that you want to test is available in store, right? Many times because the cost of the samples, the beauty brands and the retailers are limiting the number of samples. Now with the AI and AR technology, it really solved that at once, right? You can try before you buy, you can try all the SKUs available because it's all done digitally. And it's convenient. One of our first customers who launched this in 8,000 stores worldwide, their slogan was 30 shades in 30 seconds, right? How you get, because one of the key challenges the beauty brand had was even they have a lot of colors in their collections, the shopper will probably only end up testing 1 or 2, no more than 3 colors. If you just, it's not convenient. You have to clean it. You have to put it again. And most of the young millennial Gen Z won't even let you touch their face in the store anymore. So it becomes very difficult for them to introduce new colors. By using this technology, I think it helped them solve that immensely. But the technology evolution didn't stop there. With the additional AI, going through skin diagnosis, analysis, and then more. I'll show you some use case there. This is an AI conference, so I put this chart to show you that this is not just because everybody's talking about AI, and you probably heard 300 times in the last week. We have been doing this since day one of the company, and one of the reasons we are such a pioneer and the leader in the VTO, the virtual try-on market. We were the very first company to use machine learning into AR, right? So think about today, let's say a Tesla car with a camera identifying the bus and the bike and the pedestrian in the street. We use the same technology to identify your facial movement, right? Your facial features. So we're able to detect the movement in real time and render in different colors on top of that. And then every year or two, I think there's a different upgrade generation in different AI models, in different AI techniques. And our team has been keeping up on that and creating more use cases around it. The use case will come from not only the makeup, we do a lot in color, for example, hair coloring. So today, if you go to Aveda website and you try to shop for some hair color, you can actually use our technology embedded in that website. You just turn on the camera, it's instantaneous. It looks like a magic mirror. You just look into the camera, and then your hair, you can already try on different colors. So before you make the commitment to actually go and change your colors. And then, you can go through nails and other use. I'm jumping real quick here, so I'll make sure I have time to cover everything. More recently, we expanded into new verticals for earrings and jewelries and watches and bracelets and earways. So these are already in the market. We know many of the well-known brands that you are familiar with. So here you see this is Walmart. This is one of our partners that we launched last year, and I want to show you an example here. So when you go to shop for example, a lipstick category, and you see there's a try-on button. So when the user turn on, the camera comes up, and then you're seeing your face already. And here, for example, the lady, she's my colleague, so I asked her to try that for me. So she's swiping left and right in the screen, and the shade of the lipstick is already on her face, right? So this is a whole new way of think about a personalized, interactive advertising experience, right? Instead of seeing just a celebrity photo or video who may not look like you, you actually get to see yourself. Also, something very unique because of our partnership with 600 plus brand. So we also help this brand to deliver those digital goods into different e-tailers and retailers. For example, here in Walmart, when we launched it on day one, we already helped and enable more than 20 brands, over 1,400 beauty products, and it continues to grow every quarter. Here is another example how we are helping Amazon. For example, I want to show you something with the hands, right? So it's not just for your face. This is a digital manicure product. You can buy, different nail polish and so forth. So we use AI technology to detect the movement of your hand, the fingers, right, or the nails, and then create artificial, effects. So you get to see if that match your style. Here is other example how we are doing that for Estee Lauder. So you can see here the lady's trying, the full looks. So it's just not the lipstick, right? It's including the eyeshadow, the foundation, the brow, and it's not only that we're able to do that in a tutorial. So many times, shoppers are telling us first they don't know which product to buy, which one fits the better their style, and secondly, what's the technique. So here, what we're able to do that with AR technology is to break these makeup routine into different steps. And you actually have a voice or a narration behind it. So you get to see, which brushes and what's the technique and which product, and you can add to basket right there from the experience. So it's really cool. And there are just more and more of this experience. Again, more than 600 brands has already adopted this solution. We didn't stop there. We taken this technology and embedded that into advertising formats. So here, for example, when a consumer is browsing social media and you come to see an ad, typically it's a video. But then within the video, there's a try-on option that you can turn on, and then without leaving the media, then you turn on the camera. And for example, this Gucci lipstick that she was trying on, she can experience the colors there. And if she like it, she can tap on buy now, and you go to Sephora, for example, to do the purchase. We've done similarly with watches, for example, with Cartier. So here, again, the experience, you're browsing it, you see the video, and under the video, you see the button say try it on AR. And similarly, when you tap on that, it takes a few seconds to download the modules, and then you get real-time experience. So you can see how that Tank Cartier watches work on your wrist. Cool. And the same with nail polish. So other thing worth mentioning is very unique because we have very much expert in this beauty vertical. So all these tech giants that you see here, whether it's here from the US or mostly also on China, they all adapt our technology, right? So today, if you go on Google search and you search, for example, MAC lip glass, you get the option to do this virtual try on. It's powered by Perfect. If you do the same in Snapchat, which is also cap table, Snapchat was our one of our investors in Series C, and they did the follow on during the IPO as well. Then Alibaba Tmall is also our investor. They started to partner with us since our Series B, so probably like 5 years ago. Still remain on our cap table. So what we are really offering them, why we're partnering with all these different platforms, because it is important for the brand to build this omni-channel strategy. And so it doesn't matter if the consumer today are on their .com or they are on Sephora or they are on Walmart or different platform. If they are testing, for example, the Estee Lauder certain franchise or lipstick, the effect has to look exactly the same, right? Because otherwise, consumer wouldn't trust this technology. And in order to accomplish that, is all the AR rendering engine has to come from the same company, because then we control the format, we control the rendering effects, and we are the only one who are able to do that. And that really created a really good moat. So it's very hard for anyone else to come and take our business, because the switching cost for the enterprise is extremely high, right? So because all these touch points we already built over the last almost a decade, make it very, very sticky business with all the beauty enterprise. I want to also talk about what we are doing in generative AI. Very, very cool stuff in our B2C apps. So in the last 12 months, we launched probably more than a dozen different use cases on generative AI in our YouCam apps. So we'll go just maybe one by one. For example, just this month, we launched what we call the AI makeup transfer. So this has always been a very high want feature from the beauty consumer. Like, oh, I've seen some looks, on Instagram or on a certain magazine or on TV. Can I try it on? Does that fit my style? And it's very trendy. So without waiting for the designer to create that looks that might take many weeks, the AI technology just need one image to scan the reference image and able to extract the makeup product, the colors, the layer, and then put on your own face. Right. And then you see here, for example, how the AI is taking just a few seconds to create that. And then after you have that effect on your face, because we have this database of 700,000 products, you're able to cross that and understand which brand actually produced that color, right? So you can actually try to order that online. So this is a great use case for both the B2B and also the B2C. Another one that we use extensively for hairstyle generation. So the lady you see here is actually our founder CEO, so Alice. So I like to use her image on my presentation, and we just need one image from her, and the AI able to recreate her in different style. We have taken this technology and partnered with brand like Tresemme, right, on Unilever. So if you today go to tresemme.com, then there's a function for trying different hairstyle. Go try it. It's going to be a lot of fun, right? You take a photo and you recreate you in a very natural way. Not only for style, this is another technology we just launched recently for hair extension, right? So if you want to get to see yourself, with a different lens of hair, so you can make a decision that, to get a haircut or to have a long hair, much more welcome to do that. Another very big opportunity we're working on right now is how we expand that to fashion and clothing, right? So it's a much bigger market than just makeup. So here, what we're able to do is this a completely different approach than the traditional way where you actually have to take the dress and go through a scanning process and it takes a lot of time and money. It's very slow. In here, we just need one images, right? So the AI is scanning the image. You see the reference image there, for example, here. And it's identifying like what kind of fabric it is, what kind of color, what kind of dress, it's a jeans. And then we're able to use Gen AI capability to recreate yourself wearing that, right? And the effect, if you come close to this image, it's not exactly the same piece, right? So it's not creating an overlay layer of that piece on your body because it always doesn't look so good. There was kind of the old way of doing it. The generative AI way is just recreate the whole image, at once, right? And it looks super natural. The one thing that to get you probably a little bit more excited on this is I've seen in our lab here, I didn't put in here. Our goal is to be able to create these not as an image, but of yourself in the 5-second or 10-second videos, right? So think about if you're shopping online and you're thinking about if that suits you better, you're able to just one click, the AI will create a 10-second video showing you different poses, walking down the runway, right? And you know, wow, that Valentino actually worked on you. This is another example of how we're using generative AI. It's called the AI headshot. I personally use that a lot on my LinkedIn, and whenever I need to use my photo in a speaker profile, for example. And I don't even remember when was my last time in the studio anymore. So I don't spend that time anymore. I just need to put myself in there, and actually with different prompts, I can tell the AI to generate me in a different color of the suit, different ties, without ties, right? And it works for men or women. It's great technology. And if I want something a little bit more artistic, this is another function of our app called AI Studio. This is actually my coworker. She lives in Taiwan. And look at that, with about 8 images of herself, the AI be able to learn about her facial features and then recreate her in almost really a professional level studio shooting. And it's not only that, is the background, right? For example, she's posing that with a leopard or a wolf. That is going to be difficult to do that in real life, but here the quality is just amazing. Like Hollywood level studio just in the palm of your hand. And this is just some examples like why we use to pay $39 to access this app, because it give you this capability to create such things that you may want to share socially. And I think a lot of young users are doing that more and more often. And there are more other interesting use cases of that, like we call the AI replacement. You can replace part of the image, with different cars, different animals. You can remove part of the image that you don't like. Last 5 minutes, I want to really quickly touch about some of the financial highlights. We just filed our 20F not long ago, so welcome to go to our website or to SEC to find more information about it. But top line last year we did about 54. Last quarter 4 was actually very strong. I think we've seen a good bounce back from both the enterprise but also the B2C business. So last quarter 4 was around 28% growth. Year over year was a little bit less. I think the first half of the year was a little bit more challenging. Software industry, not really a lot of capex and a lot of costs. Gross profit margin about 81% last year. There was some decline last year, mainly because our B2C business is growing up much higher. The B2B business is over 90% margin. B2C, because the Apple tax and the Google, right, the 30% that we pay them, so it's a lower margin. On average, it's about 81. So I think that will probably remain that ratio for the time being. In terms of bottom line, last year our net income was about 4.5 million. Adjusted net income, I think, was a little bit over 7 million, so about 13% in margin. So we have been running cash flow positive for quite a few years now, so it's good business. I just want to talk about that. So last year our operating cash flow was about 13.5 million positive, right? Came from negative 3.x million. Again, that 2022 was the listing year, so there was a lot of fee related to that. So I think the business is very good. One thing I didn't put it here is our balance sheet remained very strong. As of last reported quarter, we have about 150 million in cash. So it's something that we wait to deploy for MMA, for accelerated growth and so forth. And the guidance for this year, we have been beating the street consensus of 4 or 5 consecutive quarters now. So we always start conservatively and hopefully to exceed that. So for this year, I think we're looking at 12 to 16% growth, but the pipeline looks a lot stronger than that. So lastly, where do we go from here? Core business is in the beauty. We think there's still a lot of runway in there. We want to deepen the penetration in more of these top brands, do more cross sales, more country deployments, more SKUs. But in the recent 2 years, we expanded our product more into the skincare area as well. We're servicing the med spa, the aesthetic clinics, right? So I think there's not just the brand, but there are different use cases. We just signed up, pilot with, for example, cruisers and hotels where you have a lot of spas in there, right? So they're using AI technology to engage with consumer, telling them what exactly they need or what the benefit they get from these different product treatments. And then continue to expand into fashion and jewelries. We have more than a dozen of the top brands like Louis Vuitton, Cartier, Hermes already with us. I think there's opportunity to expand more SKUs presence in there. Continue to innovate in generative AI. You saw a little bit glimpse of what we're doing that, and I think the potential is unlimited. And then lastly, I think continue to look for good target for MMA that can be synergetic to our business, that can help grow and accelerate that. Internally, we have this mission of getting to about $100 million ARR as soon as we can, right? I think that's an important benchmark for SaaS company that once you get to that scale, you'll be able to, get more attention from a wider range of investor. Okay, with that said, I think I only have 2 minutes left. If you have any question from the floor, happy to answer that.
Any questions from our in-person audience here? All right, I think we have one on the virtual audience.
So there's a question about the competitive environment for your SaaS offering, your B2B, and also if you can speak to the growth drivers in your installed accounts. How can you continue to grow the business there?
So when we started in color cosmetic, like one product only. Right now we are much bigger category, so we have more different type of competitors. But on the core business for beauty, our real competitor was taken out of the market 5 years ago by L'Oreal. Right, so there was a Canadian company that was probably incorporated maybe 5 or 6 years before we did. Right, so they were the key provider in the market, but we had a better technology. So when we came, we won a lot of their market share, and at the point they quit the market and become an in-house for a particular beauty brands, which really opened up the market. The remaining 80% of the market was left with another supplier, and that's where we came in and we grabbed that market very quickly since 2018. And now I don't think there's really a competitor that have the same bridge between color and skincare and fashion and the B2C aspect. So that's actually very unique. So there's not a lot of comps, frankly speaking, right? Because I think we have the entire beauty tech category was really created by us. So if you search today on Google like beauty tech, you'll probably find us like #1 spot always, right? So this is something that in the beginning was very difficult. The brand are very conservative, so they didn't understand what's the impact. So it took them a few years to understand and do a lot of pilot. And I think now we are kind of enjoying that position that we service more brand than anybody else. The other competitor in skincare, there might be a few in Europe, but much smaller, right? So probably, startup, less than $1 million revenue type. So I don't think this really possess any real competitive pressure to us. Where we grow from here, I think there's still a lot of market. For example, when we started almost a decade ago, we surveyed here in the US, how many percentage of the women knew about virtual try-on? It was less than 5%. We did the same survey right after the pandemic, right? So a couple of years later ago, and that percentage went up to about 25% now. So still 75% of the women, at least here in the US, have never tried virtual try-on before. And I think they should, and it should be part of their shopping journey for the next generation of users. So I think this is where we want to go. We want to educate and open up that market with more brands and also with more consumers.
We do have, hold on one second.
You have impressive tech, impressive company. Financials are amazing. You have cash in the bank. What would you say is the one or two things that the market is not getting to reflect the value that you feel you rightfully and fundamentally actually deserve?
And I also like to learn that more, from the community. And I think it's a new ticker, right? Don't really have heard of us. So I'm spending more of my time here in the US in different circuits, in Europe as well. But also I think liquidity has been challenging, right? So I think for small cap company, whenever I talk to investors, story is right, unique technology, everything is good, but they just need more liquidity to build a position. And I think we've seen in the last 50 days, our daily volume has went up about 5 times. Right, it's still small, but it used to be like less than 10,000 shares a day. Now it's over 50,000 shares a day. So I think it's going to take time to open up this market, and I hope many of you here will see that this is certainly undervalued a lot. There's a lot of upside here. It was initially because we did the de-SPAC 18 months ago, right? So there was high redemption, but we still raised about 120 million, about at $1 billion valuation at that time, right? Because of the pipe. But then because of the high redemption, there was not a lot of public float. 100% of the existing shareholders were on lockup for a long period of time, that they just came out the lockup about last year, right? So I think the flow is now improving. Thank you. Hope you will get some momentum there. Thank you.
Louis, thank you very much for your time. I think everyone's going to have a new LinkedIn profile picture after your presentation. Thank you.
Our next presentation will be from Tim Shi, CFO and Director of QuantaSync Group Limited, which trades on the NASDAQ under the symbol QSG. As a reminder to all persons in attendance, immediately following the presentation, management will be in the front conference room for a breakout session if you'd like to meet with them there. If you'd like to schedule a one-on-one meeting with them, please see the Water Tower desk. Welcome, Tim.
Thank you, everyone. I'm Tim, and thank you for being here. I will give you an introduction about QuantaSync. QuantaSync is we are currently the largest adult online learning platform in China, and our mission is to improve people's quality of life and well-being by providing them with lifelong personal learning and development opportunities. This is a glance of our latest quarter's performance. So over the last less than 4 years of operation history, we have accumulated over 112 million total registered users. That is nearly less than 1/10 of Chinese population. And also for the latest quarter, we achieved over 0.4 million paying learners, and also nearly 1 billion RMB revenues, and over 103 million RMB adjusted net income. And also we have a very solid cash reserve of over 1 billion RMB. This is our industry we operate. We currently is the largest online adult learning platform. We mainly serve and focus on the middle-aged and elderly people's learning online. So we face a very strong demand for personal development and the concept of lifelong learning. You can see from the slide the growth rate and also the market size, especially for the aging population in China. So we are facing a very strong market, and also during the past 4 years, over 4 years, we grow up as China's largest one, the provider, and also we have a diversified course offerings and an in-house content development team, and we have adopted and pioneered the dual instructor approach and online community training. So since launch of the business in July 2019, we purely operate the business online, leveraged by our fast evolving technology infrastructure. This is the 2 points we summarize. The first one is our diversified course offerings position us for robust long-term growth, and also we have accumulated our experiences, and we have built up a scalable business model to facilitate the rapid launch of new initiatives, including both the courses and other initiatives. For example, the live streaming e-commerce. And for our learning businesses, we have 3 categories of the courses. The first one is skills upgrading courses, and for such kind of courses, the largest SKU, the largest topic is the short video production. And also, because in China and global-wise, the short video platform is very popular, so we offer the topic to teach our students, to teach our learners, and also we have achieved a very high figure of the satisfactory rate. And also the second largest one is the financial literacy courses we offered since the launch of the business in July 2019. And up to now, we have a very solid base of our learners under this kind of course topics. And also, this market is still very big because of the relatively lower financial literacy rate in China compared to the developing markets like US and UK. And also, because this is a very long history courses we operate, we have accumulated a very solid repurchase ratio for our course deliveries. And this is the second one, the recreation and the leisure courses, which are tailor-made for the elderly people. We just launched such kind of courses since June 2022. And these kind of courses include the calligraphy courses, like the one you received, Mark. This is works by our learners. So, and also the piano, some music training, and also some Chinese physical exercise training, like stand meditation, such as these kind of courses. This is our new initiative because we serve a very large number of user base who are mainly the middle-aged and elderly people and the mass public people in China. So to extend the lifetime value of our learners and users, we tried new initiatives leveraged by our existing technology base and also including the live streaming technology. So we deliver the courses by live streaming, and also since late last year, we started the new initiatives delivered by the live streaming technology for the e-commerce. The one of the products we deliver is the Chinese liquor called Chinese Baijiu. So it's very popular among the Chinese mass public people. This is the innovative learning journey we have developed to deliver the courses with and also the interaction with our learners. First, we will on the first stage we post our ads to attract our learners, the potential learners from the short video social platforms such as TikTok in China, and also other platforms such as Xiaohongshu and Kuaishou in China. So the similar platform like TikTok, and then they will the potential learners will become our introductory course learners. In this stage, all of the courses are delivered for free, and we deliver all of the course topics by the live streaming technology, so that we can leverage a very sizable economy effect with one lecturer to deliver that. Maybe over 100,000 learners can enjoy the process. And after that, after free lecturing stage, some of the learners, free learners, will become our premium course learners, and then we will enjoy the revenue from the learners, and also we can extend the lifetime value with them with a very close interaction with them. I think the key we deliver the value we deliver to our learners is the contents, because our customer base is a Chinese mass public who are not so educated and maybe not with not so sophisticated knowledge and skills, so that we can create and modify all of the professional skills and knowledge into a very easy to understand and interesting way, so that we can deliver such kind of content with live streaming technology, so that they can enjoy the process, the interaction with the platform. So the in-house content development team and the monitoring system is very important. All of that is our own methodology to update in a very frequent way to serve the customer demand, and also to see the market trend to tailor-made all of the contents for our learners. And this is a technology infrastructure, including the live streaming system, which is very important through the whole of our products delivering and service delivering. And also we have developed so many intelligent study toolkits to let our learners enjoyable and with very close interaction with the platform during their learning process. And also from the customer acquisition to the services delivering, the whole process embedded with our business intelligence system, and also the business operations are highly embedded with technology and smart tools, including the AI tools. For example, for our lecturing, the lectures' performance are highly supported by the AI tools and AI technology so that it can improve their performance to see the track record and with their interaction with the feedback from the online learners' behavior. This is our strong funnel and efficient customer acquisition. Our customers from the social media campaigns and also the content community, and we deliver our introductory and premium courses and mini lectures online through the WeChat Camp, and also a mix of the course deliveries. And also because we have a large user base and also the technology base, we partner with some of the corporations to for the marketing services for them, and also we have a very small portion of the enterprise talent management services for the corporate partners. This is our growth strategy. I think the first, since we are still a young company, though we listed last year January in Nasdaq, and we are still a young company with over 4 years of operating history. So the first priority is still to grow our user base and drive the user engagement, both for the courses and other new initiatives, including the live e-commerce. And also to enrich the cost offerings and with proven demand, develop the enterprise services. And the key, I think, is to invest in technology and data analytics, because we have a huge amount of data and also the users. So AI application is very natural for us to deploy among all of our services. And also to attract and cultivate talent. And the last one, I think, is very important currently. Since late last year, we acquired a Hong Kong-based small company called Catalyst Education as our first step into the overseas market. But because during the past 4 years, our nearly 100% business generated in mainland China, we serve almost a very large user base in China. But I think for the technology we accumulated and also the operating experiences and also the services and products can be leveraged into the overseas market. So starting from Hong Kong, we will actively for business opportunities overseas. Yeah. So to summarize, currently we are the largest fast-growing market for the middle-aged and elderly training in China, and also to serve this kind of population. And also I think the key is a scalable business model for the live streaming, for the tools we have developed. We can use that both for the courses and other services to our customers. Our commitment to the online learning industry and some social because our fiscal year end is June, so the latest quarter is last quarter in 2023. So for the performance, you can see our total registered users grow very fast, and also the quarterly paying learners is growing very fast, over 4% in the latest quarter. Also, this is our revenue breakdown. The majority of the revenue is contributed by the individual online learning services, and also the other services means the majority of the other services is revenue. So this is a new, very great potential to grow in the future. This is improved efficiency and profitability. So the adjusted net income, which can demonstrate the normal and ordinary operation results of the business. The only one adjustment is the share-based compensation expenses, non-cash and non-cash item. So we adjusted that to see. You can see from the last, especially the last 5 quarters, we always generate a sizable net profit. And for the loss in that quarter, that is because the launch of the second leisure and recreation courses. Because when we launch a new brand and new courses, we should invest in the selling expenses, the expenditure, but revenue should be recognized in the following. That is the reason. And also, this is a cash and cash equivalents, which is a cash reserve for the platform. I think the slight decrease in the September 30, 2023 is just because our repurchase of some stock in the market and block trade. And our for the latest quarter, you can see it's over 1 billion RMB real cash reserve. This is a yearly net cash provided by operating activities. So since the launch of the business, we stick to the operating philosophy. We should make money, and so that is why we always generate positive cash flows. This is our balance sheet, and maybe you can see from the filing. Our the cash reserves are mainly our balance sheet item. So we have a lot of cash reserve, which means potential to do a lot. Yeah. Yeah. Thank you. So answer any questions.
All right, Tim, thank you very much. Oh, John, I love that enthusiasm.
So I wanted to know if you could give us any insight or color into the competitive landscape, who your competitors are, and how you basically win customers against them.
Yeah. I think basically we are not a traditional or typical education company, both globalized and in China. I think the key is that we want to serve this kind of population. So that's why we launched the education courses, which are very interesting to attract them and to serve them, so that we can provide more services and products to serve this kind of population. For such business model, I think in China there are many small competitors currently, but we are definitely the largest one. There may be many times of large than the small competitors. And for global-wise, I think maybe they're not a very similar business model with us, because we use live streaming technology, because we serve the mass public, including the elderly people. And so I think for the business model, maybe Udemy is something like us. But Udemy, half of the business revenue of Udemy is contributed by the business sector. So and also for Udemy, they are the platform to match the tutors, and all of the lecturers are our employees to control the quality. But we have very few lecturers, because we can leverage the power of the lecturers through live streaming. So one lecturer and maybe can deliver services at one time to over 100,000 learners. So that's the difference other competitors. Yeah.
Any other questions from the audience? All right, I think, Tim, thank you very much. Great presentation.
Yeah, thank you very much.
We're going to take a little coffee break right now.
Our next presentation will be from Dean Skirka, President, CEO, and Director of WonderFi Technologies, Inc., which trades on the OTCQB under the symbol WONDF, as well as the TSX under the symbol WNDR. As a reminder to the persons in attendance here, immediately following the presentation, management will be in the front conference room for a breakout session if you'd like to meet with them there. If you'd like to schedule a one-on-one meeting with them, please see the Water Tower desk. Welcome, Dean.
Guys, appreciate it. It's great to be here and look forward to giving you guys an update on the company. WonderFi at a high level, briefly, for those of you that are not familiar, WonderFi is publicly traded on the Toronto Stock Exchange under the symbol WNDR and on the OTC markets under WNDF. WonderFi is Canadian-based and has built up the largest ecosystem in Canada for digital assets. These are the three brands that we operate today and wholly own: BitBuy, CoinSquare, and SmartPay. BitBuy and CoinSquare are two of the longest-serving crypto trading platforms in the Canadian market. Collectively, they service over 1.6 million Canadians, both retail and institutional accounts, and have over $1.5 billion of client assets on the platforms today. SmartPay is a crypto payments business that quite simply allows merchants around the world to easily accept cryptocurrency for the goods and services they offer. SmartPay really eliminates all of the friction with opening up wallets, understanding how the blockchain works, having to liquidate cryptocurrency. We assume all of that for the merchants. And so in the case where a merchant uses SmartPay and maybe sends an invoice to one of their clients, we would take the cryptocurrency, we would liquidate it in real time and settle with the merchant the fiat less our processing fees. In terms of how we've built the presence that we have today, WonderFi has been really active with respect to mergers and acquisitions over the last few years, using our public currency to build up the presence that we have today. Starting with the acquisition of BitBuy in Q1 of 2022, that's where I joined the WonderFi family. I was the president and CFO of BitBuy when it was acquired, and I joined WonderFi at the time as the head of exchanges to really build up our presence in the Canadian market by continuing to consolidate additional competitors' crypto trading platforms. I took over as CEO 6 months later, and over that period of time, that we have completed acquisitions of Coinberry, Blockchain Foundry, CoinSquare, CoinSmart, SmartPay, Bitvo, and more recently announced our expansion plans into Australia through another acquisition. Naturally, when you acquire 5 crypto trading platforms and 6 businesses over the course of 2 years, really the integration plans and how you bring it all together becomes incredibly important. And so really beginning in earnest in 2023, we started building out these integration strategies, bringing our overall head count down, operating fewer trading platforms, reducing our overhead, and really focusing on sustainable profitability and really demonstrating the economies of scale that we've created through these consolidations. Looking at the last 4 quarters, we think it's really reflective of what we've been able to accomplish. When you look at the trading volumes, which generate most of our revenues today, you can see a clear pattern of growth over really dating back to the second quarter. The results of the consolidations that we've completed have brought more users to the WonderFi ecosystem, which has increased trading volumes. What you're starting to see in the fourth quarter of last year and the first quarter of this year is how our platforms respond when markets start to improve in the digital asset industry. Naturally, over the last 6 months, there's been a real narrative shift in the digital asset industry, largely led by and initiated by the excitement around the ETFs. Now, we'll talk about it later in terms of a broader crypto outlook, but you can see the reaction that our platforms have when markets improve. We've been able to, in Q1, we saw a 75% increase in our retail trading segment compared to the prior quarter, really reflecting the return of retail excitement to the asset class. When you think about our businesses and the reason why we break out retail and institutional trading is because of the different profile of clients that they obviously cater to, which also reflects the revenue profile that we generate from each vertical. And so when you think about retail, you think about someone opening up their mobile app, sending a few $100s, a few $1,000s, and looking to buy Bitcoin or Ethereum or Solana or maybe Dogecoin. And within that retail track, we're targeting 2% fees on trading volume, which is obviously a really good margin for us. It is relatively consistent with the industry, and we do not anticipate any pressure on those fees looking forward. When you think about the institutional track, you're talking about family offices, institutions, mid-market corporate accounts, and larger ticket sizes, so $1 million plus most commonly. And for those trades, we typically target about 1%. And so depending on the profile mix of our volumes in any given quarter, it will largely dictate the revenue that we're making on average across the crypto trading segment as a total. And just anecdotally, what we've seen with retail trading as an overall percentage of total is it has increased from about 37% in Q2 of last year of the total to 47% in Q1. And so we're really starting to see retail volumes ramp up. They are obviously move in bigger chunks than institutional clients. And so that's a really encouraging sign for our business looking forward. In terms of what that means for revenues and our profitability, you can see again quite clearly that our revenues have been ramping up consistently dating back to the second quarter of last year. In July of last year, we acquired both CoinSquare and CoinSmart, two leaders in the digital asset industry in Canada, which really transformed the entirety of this business. When you think about the revenue profile in the third quarter of last year compared to the second quarter, you can see that we've tripled our revenue profile from 3 to 10 million. That's really reflective of the consolidations that we completed in the third quarter when we acquired both of those businesses. Moving into the fourth quarter of last year and the first quarter of this year, again, the trend is largely driven by the improved sentiment and within the digital asset ecosystem. And so as more people continue to trade, we're able to drive additional revenues. When you look at the finance income, that also has ramped up. That's income, that is generated off our client balances. And so I mentioned that our clients hold about $1.5 billion today across our platforms. Let's say 10% of that is in dollars. And so what we're able to do with those dollars is put them into high interest savings accounts and capture that income for the benefit of the business. And so you're able to see as clients are trusting us with more and more assets, as the excitement and the overall sentiment improves in the industry, we're able to generate real income off of that. And so in addition to our revenue in Q1, we were able to generate $1 million of finance income. I touched on the importance of integrations and the long-term viability of our business. Obviously, when we did the bulk of these transactions, we were in a much different environment than the one we're in now. And there was a clear emphasis on cost cutting, on sustainability, on finding a way to bring these together and create the economies of scale, identify the cost synergies, and really create a sustainable business that could produce positive EBITDA and net income. We've been really excited over the last 2 quarters that we've been able to demonstrate this, and we think that's a really strong reflection of the integrations that we've completed. As I mentioned, we've acquired 5 crypto trading platforms over the last 2 years, and today we operate 2. And so we've taken the user bases from the 3 others, migrated them into the BitBuy platform, and shut down those businesses, realizing meaningful cost savings on a consolidated basis. Looking forward throughout the rest of the year, we're targeting about 20% EBITDA margins and believe that the business is in a really strong position where it has sustainable and predictable cost base that is completely controlled through the process that we undertook at the end of last year, really understanding every cost and understanding go-forward vendors, using our scale to negotiate more favorable terms, and really reducing overall headcount, focusing on optimizing and using technology where we can. What this has meant for our overall cash, digital assets, and investments, company treasury, is reflective as well in this chart. And so if you think about where we were in the second quarter of last year with $7 million and about $500,000 of investments, you can see the real impact that 3-way merger had in July of last year when we brought CoinSquare and CoinSmart into the WonderFi family, significantly increasing our cash balances and our investments as well. Those investments include 37% ownership in a company called Tetra Trust, that is Canada's only qualified custodian to custody digital assets, and also includes certain investments with other crypto businesses and certain crypto native hedge funds. I'll explain why I mentioned that on the other side shortly. But you can see the ramp. And so when you look at a company that had $33 million at the end of the third quarter, growing that balance to 37 in the fourth quarter, really reflective of the slides I just showed, being able to drive real profitability and cash flow on a consolidated basis. You'll notice a meaningful jump in Q1 from 37 to 53. A lot of that was driven by distributions we received from some of those investments on our balance sheet. And so in the first quarter of this year, certain of those crypto native hedge funds distributed 61,000 Solana and approximately 159,000 Polkadot to WonderFi. And those were liquidated and generated about $10 million into Treasury. And so when you think about the $10 million injection and you think about the continuation of our abilities to generate profits and cash flows, we have turned WonderFi's treasury into one of our clear competitive advantages. You think about the strength we've created through these acquisitions, through our focus on profitability. We think this slide really demonstrates the position we're in now. And so now that we're in a position where we have a really strong balance sheet and stable business, the focus really turns on how are we going to utilize this cash to continue to grow the business? How are we going to invest, and where are we going to invest in the business to really continue ramping up that growth looking forward? One obvious example would be to invest in new product development. We think a really good example of that is the staking product that we launched on BitBuy about a year ago and on CoinSquare about a month ago. I'm not sure how familiar this group would be with staking. Staking allows users on our platforms to take proof of stake assets, most commonly Ethereum, and stake it into the network to generate passive income rewards for those users. And so if you think about the Ethereum example, a user would come to BitBuy or CoinSquare, they would send us dollars, they would buy Ethereum, and then they would stake it into the network through our platform, generating approximately 4% APY on Ethereum in Ethereum units today. And so what this does is this creates an additional product line on our platform, which is competitive with the global market. It allows our clients to earn additional rewards off the certain assets that they hold with us, and it creates a predictable revenue stream for WonderFi moving forward. You can see the buildup of this product quarter over quarter and the success we've been able to achieve with this product. And we think that it is a clear example of the additional complementary products and services that we're able to roll out within our current platforms that cater to crypto enthusiasts and crypto users. We have a clear track record of working with the regulators in the Canadian market to build out these products. Both BitBuy and CoinSquare are fully regulated in Canada for spot trading, and more recently, through a collaborative effort with the regulators, have been able to launch staking in a regulated ecosystem. Moving forward, other products that we think are complementary that we're very focused on include equities trading and potentially more impactful than that, margin and derivatives trading and margin and derivatives offerings. And so you think about the global crypto ecosystem, margin and derivatives play a very important role. You think about the US market and the Canadian market, it's hard to access those products due to the regulatory positioning that has been created in both markets. We're working closely with Canadian regulators to find the balance between product innovation and consumer protection to bring these products to the Canadian market, creating a blueprint for us to take into new markets as we expand. And so another example of ways in which we're going to invest into our business moving forward is international expansion. We announced about 2 weeks ago that we had acquired an Australian entity that had the requisite licenses for WonderFi to operate its crypto trading businesses in that market. This is something we're really excited about. We think there's a ton of opportunity in Australia. As you can see here, Australia boasts one of the highest rates of cryptocurrency adoption globally. It's a Commonwealth country, so regulation is quite similar to the Canadian market, obviously an English-speaking language. And from our assessment, the demographics really align closely to the Canadian demographics, which should make marketing efforts more streamlined and in line with what we're currently doing. As you can see, we expect to be live in Australia in the second quarter of this year. And so in this quarter, we'll be launching our platform in that market, targeting both retail and institutional client bases. And we think this is the first step of many for us in terms of broadening our footprint outside of the Canadian market. Crypto is obviously a very global industry. You think about, popularity in Asia, Latin America, it's starting to become more popular in Africa. We think a lot of the work we've done in terms of, regulatory understanding and positioning, technology infrastructure, marketing, and branding will really allow us to expand into the newer markets. And when we look at newer markets, what we're looking for is a balance between adoption rates, so a clear population that has clear interest in the asset class, and that's at the same time clear and concise regulatory framework. We understand that crypto is a new asset class, and there's many skeptics and critics. Certainly, as a public company, we don't want to be entering into new markets where there isn't clear regulation, because we run the risk as a business of having to pull back or change our business model depending on the evolution of those regulations. We would rather sit back, identify markets where there's clear and concise regulation, and move into those markets with confidence as a public company, giving those assurances to our investors that we will be operating in these markets on the business models that we intend to operate for a long period of time. In terms of our capital structure, this will be another example of ways in which we're going to invest in the business. This week, we announced a normal course issuer bid to acquire 25 million shares over the course of the next year. You can see that we have been able to, as evidenced by the slide I showed at the beginning, we have primarily used our public currency to acquire these businesses. And so through that process, we have increased our capital structure, and we believe that the fundamentals of the business really support that growth. And you think about a business that is doing $18 million of revenue this quarter, $5 million of net income. We're really focused on building out that presence and the business in terms of the overall growth strategy. I'd say the trading volume is something that we've been focused on quite significantly. We have research coverage from H.C. Wainwright, A Capital, Haywood, and really that increases our overall distribution. And for a company with our market cap, we think we trade really well. We trade about 2.5 million shares, a day in the first quarter. And for a stock at 25 cents, we think that's really strong in the Canadian market. Obviously, moving along, we're looking to expand our presence with other distribution channels, more research, additional coverage, and potential uplistings in the U.S. In terms of the broader crypto market outlook, just a quick data point on where we see the market and where the market sort of evolved over the last 6 months. As I mentioned, when I think about the last 6 months and the real turnaround that this industry has seen, a lot of it has been driven by these ETFs. And you think about the impact of BlackRock, Fidelity, Franklin Templeton entering this industry and what it can do in terms of maturing our markets, creating a more institutionalized market for the industry more broadly. The sentiment is clear and the turnaround has been evident. You think about $12 billion of net inflows in the first quarter for these ETF products. By many analysts' estimates, that has surpassed what they believed would be the inflows for the entirety of the year. This has clearly had a positive impact on the price of Bitcoin. We've seen Bitcoin go to as high as $75,000 in Q1, currently trading around $70,000. A lot of that, a lot of that appreciation is due to the fact that $12 billion of net inflows came in from channels that otherwise hadn't existed previously for crypto. And, so we think that it's done that the ETFs have served as a catalyst to really improve sentiment, really shift the industry in a more mature, institutionalized direction. And at the same time, through the success of these products, we anticipate that these asset managers will continue to invest in the industry. Everyone in the industry is talking about the Ethereum ETF as the next shoe to drop. From there, we'd expect structured products and a continuation from these providers to continue to invest in the ecosystem. We think that really opens up the doors for a broader audience to partake in the asset class. And really what we believe is the most important thing is for people to start. And if they're going to start with a Bitcoin ETF, we're fine with that because we understand the trends, we understand the adoption that we've seen over the last 6 years. And really, once people start, whether it's with a Bitcoin ETF or using our platforms to buy Bitcoin, the education really kicks in. They care more. They have a vested interest. They want to understand the difference between Bitcoin and Ethereum, the difference between Ethereum and Solana and other layer 2s. And if you think about the market today, you can buy a Bitcoin ETF, but you can't buy the Ethereum ETF. So as that education and that curiosity grows, you will look to platforms like Coinbase, like BitBuy, like CoinSquare to buy those additional assets. Perhaps you want to stake your assets. You can't do that through an ETF, as an example. And so this is a really good catalyst that opens up the market, really creates a new narrative around the market. You think about a year ago, people talking about SBF and all of the Voyagers, the Celsiuses, all the negativity. You know, where we are now is remarkable, truthfully, and a lot of that has been driven through the ETFs and the ETF providers that have really invested in the asset class. Looking ahead, you know, further catalysts. There's the Bitcoin halving event that's this month. Again, another catalyst once every 4 years that drives awareness, attention back to the asset class. You know, people check their wallets for the first time in a year or a few years. It really reignites the conversation and makes cryptocurrency more top of mind for a broader audience of people. Clearly, as we've demonstrated in the last 6 months, you know, WonderFi and its operating platforms clearly demonstrate an ability to drive increased revenues and, more recently, profitability in these market environments. You know, we are quite confident that the catalysts are in place to keep cryptocurrency in the spotlight throughout the rest of this year and looking forward. And we really expect WonderFi to continue to grow within that. Just rounding it out with some key company highlights. You know, whether it's a 1.6 million users across all of our brands, which would be Canada's largest ecosystem for digital assets, the $1.5 billion in assets under custody on our platforms today that really reinforce the trust that our clients have in us. The proven industry consolidator. We've acquired 5 of the 11 regulated crypto trading platforms in the Canadian market. We have diversified our revenue streams. When you think about the retail segment and you think about the institutional segment, and then you think about the staking offerings that we have, and then the payments business that we have, you know, we've really done a good job at diversifying revenue streams and being in a position where, you know, we're making money in different ways throughout every single day. Obviously, today, retail trading is one of the bigger drivers. If you look back to last year, institutional volumes were really the stabilizer that allowed us to really grow our revenues. And, you know, there's different pockets for different moments. And we, on a consolidated basis, we think that's reflective on the growth we've seen in the revenues. With $53 million of cash and digital assets on our balance sheet, we have a really strong balance sheet built for growth. As I've demonstrated, we have clear plans to invest in new product development and geographical expansion and buying back our stock when we believe it's undervalued. And we believe that those efforts will continue to fuel the company moving forward. I've touched on the revenues in terms of international growth, clear and concise plan to grow our presence outside of Canada, beginning with Australia and targeting new markets. And then when you think about, you know, the last 2 sequential quarters of positive EBITDA and net income, we think for a business of our size, having brought in 7 companies, including WonderFi together, really demonstrating that consistently over the last 2 quarters is really important for us and something that we will look to continue to focus on moving forward. When you acquire 5 crypto trading platforms, the focus is on integration and how you're going to bring these businesses together. Think about this, you know, really having a clear and concise plan, reducing our overall headcount, reducing our overall expense base. You know, what we've been able to do is very, you know, we're very proud of those accomplishments. We think moving forward, again, as mentioned, we will have approximately 20% EBITDA margins for the year and believe that we are in a position to be consistently profitable moving forward as a business. You know, that is through consolidation, creating those economies of scale and really understanding the business and the inputs and working with the right vendors to have those long-term relationships. That's it.
All right, Dean, thank you very much. We're going to open up the floor for any questions that anyone may have. All right, Dean, I think we have one from the virtual audience.
So, Dean, the question's about your international expansion after Australia.
Yes.
Is it going to continue with the Commonwealth countries, or is there a path and a desire to enter the U.S. marketplace?
Yeah, the U.S. market would obviously be the most desirable market for us to enter into. Obviously, we're looking at ways in which we can do that. But as I've mentioned, we're really focused on regulatory compliance with these businesses. We understand the asset class is incredibly new. And as a public company, we want to be really sure that the markets we're entering into, we will be able to service those markets for a long period of time. And if you think about the U.S. today, there are, I would say, differing regulatory structures. Obviously, there's a state by state, segment to it or element to it. But when we think about expansion plans, that will be obviously one of the most desirable markets. We just want to make sure that our platforms and the way we operate will be able to fit within the current regulatory regime, and that's some of the work we're doing now.
In terms of the Bitcoin halving, would you be able to talk about the difference between this year and prior years, since this happens, every 4 years, and more taking into account the approval of the ETF? So it seems, kind of going to the basics of supply and demand with the amount of Bitcoin that the ETFs are buying and the halving of the Bitcoin. What should that do to price?
Yeah, no, absolutely. It's a great question. Typically, and this is not investment advice, but typically what you see with halving events is a really strong appreciation in price 6 to 9 months after. And so you think about these events that typically maybe come and go without a ton of excitement in the moment. But when you think about an asset class whose supply is reduced in half, over a 6 to 9 month period, that's going to play out. Historically, what that's meant for Bitcoin is meaningful price appreciation. And so when people looked at this upcoming year and saw the ETFs launching in January and saw the halving come in April, people were getting naturally pretty excited by what could happen here. And when you think about where we are today, already surpassing all-time highs from 2021, breaking 70,000, I don't think people expected that. And so we are, I would say, in uncharted territories where we've never had a halving year where 8 to 12 ETFs launched 3 months prior that have driven $12 billion net inflows over that period of time, and will continue to drive inflows over the next 3 months, 6 months, 9 months. And so, I'm not going to make any predictions, but it creates a very interesting dynamic. My best guess would be that these ETF providers did not coincidentally land on a halving year to launch these products. There's probably some strategy and timing that's gone into that. And, again, you think about all of the attention and mind share that Bitcoin's gathered or garnered through these ETFs. You think about the coverage on CNBC, the coverage on Bloomberg. It's in people's faces. It's front and center. You couple that with a halving, a week away, and it's just going to continue to keep Bitcoin, crypto in the news, top of mind, have people excited and engaged. And so really at a minimum, just from an awareness perspective, from a conversation perspective, we expect it to really continue on the momentum that's been created by these ETFs. Now, when you think about pricing, it's almost like a perfect storm in the sense where these ETFs are going to continue to increase their AUM. They're going to continue to open up the doors to a broader audience, and the halving will be a moment for people to really educate themselves, understand the value created within crypto or potential value, I should say. And, we think that can create a really exciting backdrop for the industry. And without giving, any price predictions, I would expect something along those lines to play out. You think about, one last point in this, you think about the likelihood on the back half of the year for rate cuts and perhaps a more, more of a risk on appetite, more broadly speaking, on a traditional basis, and that will just be another catalyst. So if you think about all of the pieces that could fall into place, as an operator in the industry, we couldn't have asked for a better setup. Our businesses have already performed really well, this far, and certainly we're excited by those pieces all falling into place, this year and what it could mean for us the rest of the year moving forward.
All right, Dean, thank you very much for your presentation.
Everyone, thank you for staying to the end. You know, we always save the best for last. So Raj here, Natarajan, is the CTO of Gorilla Technologies. So I'm going to jump off the list of simple questions and go to the hard one first. So what did you grow last year? What was your revenue growth?
We had a phenomenal year last year. We grew 189% with a total,
189% revenue.
yes, with a revenue of $64.7 million.
So we're going to see a duplicate of that this year?
Fingers crossed.
Okay. So obviously, Raj, maybe you can give everybody a little background on Gorilla and what you're doing and why you kind of have that phenomenal growth.
So we at Gorilla are a 23-year-old company. We were born and raised in Taiwan. About 2 years ago, July 2022, we took the company public on NASDAQ with the hypothesis that we can actually do a global expansion with them. Gorilla at its heart is a security convergence company. What that really means is that we protect the digital perimeter and the physical perimeters of cities, governments, countries. The way you should think about it is on the digital perimeter side, we have a very rich cybersecurity portfolio. And on the physical perimeter side, we apply video analytics for perimeter security, access control, and also for certain key policing scenarios. What we attribute our growth towards, especially in 2023, is primarily on two fronts. The first front is we have been extremely focused on growing our tribe, attracting the right talent, and actually making sure that we build the right level of efficiencies within the company in order for those talents to actually shine. The second aspect of our growth is how we actually approach the market. We are primarily focused in growing markets, growth markets, where digitization is a new frontier for them. And in these markets, we see a lot of investments happening from a physical infrastructure and a digital infrastructure perspective. And our unique value proposition of bringing the digital and the physical securities together allows us to go into these markets and provide them with much more holistic solutions. So we are a technology, a product company, but we actually focus a lot on providing those technologies to our customers in a solutioned package. And I think that is one unique differentiator for us.
Great. So maybe you can give us a little bit of your background as well. I know you're based in San Francisco.
Oh, no, I'm based in sunny Seattle.
Sorry, that was an inside joke.
So just as a background for myself, I spent a better part of 2 decades at Microsoft before joining Gorilla, wherein I ran a bunch of different portfolios over there. I'll date myself. I started off on the Zune music player, Windows Mobile, and then my last stint over there was actually in the Dynamics Business Group, trying to build AI solutions into the product portfolio. And prior to that, I worked in a bunch of startups.
Great. Sounds appropriate, actually. So what type of technologies are the ones that are most prevalent in Gorilla's portfolio?
So the way we think about the technology portfolio is, I mean, everybody's an AI company today, so are we. AI is certainly in our bloodstream. We've been doing AI for a better part of 18 plus years right now. From a technology perspective, there are two key aspects. Data is critical for any of the infrastructures that we go out and deploy. So data analytics is a huge role in our ecosystem. That combined with rich AI capabilities for anomaly detection, face detection, so on and so forth. So we are currently exploring how generative AI can actually come in and help, because at the end of the day, when our customers deploy our systems, what they're really looking for is decision support. And in order for us to cross that chasm, generative AI is playing a very important role in our overall growth as well.
So other than video recognition, what other types of AI projects are you contemplating and working on?
So one of the key areas that we're actually focused on right now is specifically around forensics. So today we provide a lot of video analytics capabilities for video forensics. And we are also one of the few companies in the world which actually has infrastructure for lawful interception, which we supply to specific governments. So whenever we talk in terms of mixing the forensics attributes over there, more and more we are also getting into messaging and text forensics as well. So that is the next area of growth for us.
So when a customer does request or talk to you, are they specifying technologies or are they just really interested in solving a problem?
It depends. When we do business in Southeast Asia is predominantly a technical driven sales story. So over there, we have a lot of customers who come and say, I want this, this, and this, and they're very specific about it. As we go into growth markets, they are less technology specific, they're more solution specific. So a majority of our customers, and we like those kinds of customers because it helps us engage with them and actually become their trusted advisors as well, which is one thing which is very unique about us at Gorilla. And these customers come to us with a range of problems which that they're looking for a solution portfolio to come and help. One of the strengths that we have at Gorilla is that our partner network is extremely vast, by virtue of which we are able to bring in technology offerings from different fields to help our customers at the end of the day. And at the end of the day, that's the most important thing for us. Customer is king. If we can solve their most difficult problem, then life is easy for us as well. And that's also another testament to how you're seeing growth happen inside of Gorilla.
So services company, product company, both. I mean, are you really bringing recipes that are repeatable to services or are you really selling products? Just kind of curious what kind of gamut you guys actually run.
Good question. We are a product company at heart, but in order for us to serve our customers properly, we have to bring recipes to the table. Some of the technology that we deploy from our side actually requires a lot of compute power, especially from an AI perspective. So most of our customers do not have the level of sophistication or the infrastructure in place today in order for them to absorb such kind of technology into their foray. So the recipes that we bring to the table are how do we create data structures, data centers, how do we help them scale their data centers, and more importantly, how do they plan for disaster recovery, which is usually an afterthought for many of our customers, unfortunately.
So now, do you get into operating data centers or you're more just giving them a template and you help them implement it? I mean, just curious as to where you end in terms of customer engagement.
So we adopt the very traditional model of build, operate, and transfer. Some of our customers come back and basically tell us, don't transfer, continue to operate it for us. Majority of my customers are government from an engagement perspective. So we actually operate their network operation centers, we operate their security operation centers, so on and so forth. So we are probably one of the first platforms out there which actually provides security operation centers as a service.
All right. So without naming names, if you can't, and if you can, that would be great. What are some of your higher profile projects that you're currently working on today and have been in the past?
And certainly talk to you about what we've published out there. We'll start with Hometown Taiwan, wherein we are actually working with the CIB over there, which is one part of their governmental network. And we just signed a contract with them last year about providing 5G lawful interception. Similarly, in Thailand, we are working with Rama Hospital, trying to revolutionize how they manage their access control within that particular hospital and also provide perimeter security for them using rich video analytics. And then the crown jewel in our hat for 2023 was the air gap network that we're building in MENA, where it's a secure air gap network for governmental communications and collaboration.
So by air gap, you mean no connection to the internet?
No connection to the internet at all.
And so it's totally closed off and less issues with security.
Yes, that's the goal.
Great. Yeah, because the whole air gap situation is always interesting to see how companies approach it because there's a plus side that you get easier security. It's not zero, but the downside is it's hard to access.
Right. That is certainly the case over here as well. So this is where some of Gorilla's own native encryption technologies are being used in order for us to secure and safeguard any form of communications. So we actually have the ability to provide communication mechanisms from mobile phones or their laptops, even when they're not in the network, through a very secure channel. And that's actually one of the things that we've been working on for quite some time.
So you were talking about build, operate, transfer as a standard approach. Are you doing things as a service as well, where you actually own the asset?
Not with the governments.
Right.
They like to own their assets. They don't mind leasing the assets from us. Basically, a SaaS revenue model is okay for them, for most of them. But at the end of the day, those assets cannot leave their premise.
So, kind of swinging or maybe changing horses here. Can you give us some insight into the last quarter or in the last year in terms of results? I know we got the headline number. That was great. But what about the other numbers?
All right. So we'll go back to the growth numbers, right? So we had 189% growth in our revenues with about $64.7 million. I mean, we published these numbers last week. They are unaudited numbers at this given point of time. Our net profit was $19.9 million, which was up from a negative $85 million in 2022. Our EBITDA is at $29 million, which is up from negative $6 million. And
So,
more importantly,
turn around from losses to profits.
yes, that's very important. And more importantly, as we rounded off 2023, we exited 2023 with an active deal pipeline of more than $1 billion
So
globally.
global. And now following on that, so what's your guidance or outlook for 2024?
Well, we don't have any official numbers published as yet, but I would say that you should certainly expect double-digit growth from us.
Now, you were mentioning that, right? You're a global company, you do global aspects. You're not really active in the U.S. and don't really expect to. I assume that's kind of
Not at the moment. We've done 2 proof of concepts about a few years ago in the US. One was with the Portland Airport, and the other one was with one of the largest sunglass manufacturers over here. But outside of that, we do not have an effective footprint in the US. From my perspective, the main reason for that is the US market is kind of flooded with AI companies over here, and there's a lot of confusion on who is better, when to use what technology for the right problems. So it's a lot more cleaner for us to run our sales cycles in growing markets than in a well-developed market like the US. But we are exploring certain strategic partnerships in the US to see if we can actually establish a baseline over here as well, specifically around our policing infrastructure.
now you moved the headquarters from Taipei
Yes,
to
UK.
To the UK, London, right? All right. So I guess maybe as a kind of a broader question, what do you really want investors to take away from this, other than hey, we're growing really fast?
We're growing really fast. I think that's very, very important. I think what's important from at least from my perspective as a technologist to the investors is that the market is changing really fast. There's a lot of growth markets out there who really need help. And I think from Gorilla's perspective, we are poised in a fashion where we are helping economic development into all the markets that we are engaged in. Specifically, I'll give you an example. For instance, we announced a strategic partnership with Lanner, who is an ODM OEM from Taiwan, and with the plan of beginning manufacturing in Egypt. And the main reason why we went down that particular path is that Egypt and the surrounding areas in Africa, they're very price conscious. It's very difficult for companies to go sell US prices in those regions. And unless and until we actually move manufacturing into those particular regions, it's going to be very difficult for companies to actually bring about price sensitive products and solutions for that particular market. Other interesting thing about Egypt is that there's about 700,000 students who graduate every year. And each of these people who graduate have a degree in cybersecurity or in AI. So it is a huge opportunity for us to build R&D capabilities over there as well. So what we're doing is we are strategically trying to invest in that particular market. We've committed about $100 million of investment inside of that region so that we can create Egypt as a hub to serve the overall MENA and the EMEA region as a whole. And what that really does is it affords us the ability to leave a very positive footprint on that community over there. Because what we really do is we try to find companies which have got the right skills And if we can bring them into our fold, cooperate with them, then we actually uplift the overall economy as well. So we just don't want to be another organism kind of, eating their food, but we want to be in a position where we actually contribute positively as well. So I think that's a unique aspect of Gorilla. So there's always this socioeconomic mindset that we bring to the table, and anything and everything that we do is always rooted in that fundamental philosophy for us. So as an investor, I think when you are investing in Gorilla, the other key point for you to also keep in mind is that that investment is actually bearing roots across the world. And I think that's a very, very unique thing to us.
Great. Well, I'm going to ask one last question. Audience, you can kind of think about what you might like to ask, but I'm curious in terms of the gross margins. Obviously, they were better this 2023 than 2022. Can you give us kind of an idea how much better?
Well, we had 69% gross margins in 2023, which I think was really phenomenal growth for us. And a majority of that is fully attributed to the tribe at Gorilla. And that's about each and every one of us having a laser focus on efficiencies, no wastage. And that's usually the philosophy for us.
Great. So we'll quickly open it up to questions. I might have one or two more.
Thank you, John. Any questions from the audience here? All right.
Are you able to provide any color on the economic impact of your technology solutions for either cities or industries that you're partnering with?
Yes, I can't share hard numbers with you right now. But usually, if you look at our solutions, I'll give you an example. In UK, we work with the Metropolitan Police, and unfortunately, crimes are prevalent. About 3 months ago, there was a shooting over there. They collected about 600 odd hours of video footage that needed to be processed. Usually what will happen is that they will hire 20 people to go through those videos one by one. And it'll probably take them anywhere in between 8 months to never to figure this out. By deploying our solution, they're able to complete their forensic analysis in less than a month, which means that the people who are actually working over there can actually be delegated to much better tasks from a public safety perspective, because these are usually police officers who actually have to go through that particular process manually. So that's just one small example of how the economic impact is actually positive for us. The other thing for us is that whenever we go into a region, we like to hire locally in that particular region so that we have cultural awareness, language awareness as well. And by virtue of which, we are able to positively affect people around us as well. So we get involved with universities because we want research graduates coming and doing internships with us, helping us develop our products, etc. So we do our bit, albeit small, right? Not at the scale of a Google or an Amazon or a Microsoft, but we do our bit for sure.
All right, real quick as a follow on, about how many, what's your head count? How many staff do you have?
We run lean and mean, about 175 people, and a majority of them are R&D.
Raj, we have a question or two from the online audience here.
We have an investor asking if you can provide some color and some scope on the MOU you announced this morning, I believe, with
Thames Freeport. So yes, this morning we announced an MOU with the Thames Freeport. We have been selected as their strategic advisor. Now, the interesting aspect over here is that we are already involved with the Port of Tyne in UK, which is a digital innovation hub. And one of our first projects with them was actually deploying video analytic solutions for container damage detection, container tracking, etc., on a privatized 5G network. It's one of the first of its kind in a port. The specifics of our engagement with Thames Freeport is to see how we can proliferate infrastructure growth and development from a technical perspective. And given our affiliations with Egypt and with Taiwan as well, we're also creating a cross-border transfer of knowledge. What that really means is that there is, as I mentioned earlier on, Suez Canal, which is based in Egypt, is going through a huge digital transformation effort internally. They do not have the infrastructure that they need in order for them to sustain the growth that they're seeing for the next 5 to 10 years. And this relationship with Thames Freeport is going to actually help us, develop some of those cross-border relationships as well. And the inside joke is Egypt has got amazing tomatoes, and we'd like to get some of those to UK and eventually to the US as well.
John, I'm going to pass the microphone back to you.
Well, Raj, thank you so much for coming and presenting Gorilla today. It's going to be interesting watching you guys this year, see what happens, and the next year and the next year after that. Investors, thank you so much for listening in this final presentation of the day. I think we're going to take a 2-minute transition and we'll switch to the next speaker. Oh,
Thank you, John.
There is no next speaker. I forgot. Sorry. Thank you all much for coming.